Starting with the ASST, this one's been an absolute rocket. But here's the catch. Technical indicators are flashing overbought signals, which usually means a correction or at least some sideways action is coming. On the bright side, ASST has strong liquidity with the current ratio near 10, so they're financially healthy in the short term. Plus, they just got a waiver allowing more flexible stock sales throughout the market offerings, which means they can raise capital more easily if needed. So, while the fundamentals and cash position are solid after such a huge run, I'd expect some volatility or a pullback soon. It's probably not the best time to jump in fresh unless you're ready for a roller coaster. Now, Vigil Neuroscience, or VIGL, is a much cleaner story. This makes VIGL essentially an acquisition arbitrage play. You buy shares below $8 and stand to make a near risk-free profit once the deal closes. If you want a safer bet with a defined exit, VIGL is the clear choice. Moving on to Navitas Semiconductor, ticker NVTS. Analyst sentiment is mixed but leans bullish. 6 out of 8 analysts are positive, but the average price target recently dropped to about $4.06 from $4.14. The stock's been struggling with revenue down nearly 40% year-over-year and a net margin deeply negative at minus 120%. That's a red flag on profitability. However, their debt is very low, which is a plus. So, NVTS is a speculative play. The tech is promising, but the financials are shaky. If you're bullish on AI hardware long-term and willing to take on risk, this one might be worth a small position. Subscribe. Advanced Auto Parts, ticker AAP, just had a big move. That's impressive, especially since they've been closing some stores and facing margin pressure. But the stock is very volatile, with almost 30 swings greater than 5% in the past year. Analysts are cautious, with price targets around $36 to $43 and a hold rating. Financially, revenue is down year-over-year, net income is negative, debt is high, and returns on assets are weak. So while short-term traders might try to ride the volatility, the fundamentals don't support a strong buy. Finally, XAGE is a wild card. Technical signals are mixed. It's oversold, so a bounce is possible, but most moving averages still say sell. The company is burning cash but recently raised funds via stock sale. So, to sum it up, VIGL is your safest bet with a clear acquisition exit and limited downside. ASST has had an incredible run but looks due for a pullback, so it's risky now. NVTS has exciting tech but poor financials, making it a speculative play on AI infrastructure. AAP is volatile with weak fundamentals, better for short-term trading or shorting than buying. XAGE is a pure gamble on AI hype with a lot of risk and potential reward. Your choice depends on your risk tolerance. For low risk, go with VIGL. For growth with volatility, ASST or NVTS might work. For trading or speculation, consider AAP or XAGE, but be ready for big swings.